Hello, this is Compound Interest Stock Guy, and today I'm going to be looking at NASDAQ, the crude oil prices for the last 5 years, and natural gas prices because I'm going to be elaborating on my top 5 picks for natural gas and oil till 2020, so stay tuned. If you're new to the channel, please subscribe, hit the bell down below so you're notified when I upload video. Give me a thumbs up. I appreciate it. It'd be cool if I got 10 to 15 likes so more people can see my video through the algorithms. I also want to disclose I'm not a financial advisor. This is just for entertainment information purposes. Do not buy or sell based on anything I talk about in this video. Buy or sell after you did your research, your due diligence, and you like the investments you're pursuing. So yeah, I'm doing this video just in my pad at my work camp. So I got number 5 is Peyto Exploration. So they did 468 million in the last year, and they're a natural gas and exploration company. They have 662,000 in cash, so not much cash, but they have a 1.1 billion dollars in debt. And their net income last quarter was 123 million, that's for 6 months for their net income, and it's with a recovery from deferred income tax. And I looked at them. I bought some calls. I sold them, or they expired worthless. Didn't pay too much, probably like 60 bucks or something like that, or maybe 100 bucks in total. Their EPS is 0.75 for those 6 months. So on an annual run rate, that's 1.5 EPS. So they have a very low PE ratio, but they have a lot of debt. So that's why their share price isn't that high. Now, if we look at the natural gas prices, okay, so where I think I'm kind of a bullish person on commodities right now, just because the weakening dollar in the US, because they want to be a bigger exporter, and they want to be more competitive, and they want to have it higher price. So it's a kind of a thing around the world that they want to improve prices in commodities. I think with every central bank devaluing their currency, so they're yeah, I think their market cap's around 685 million, and it's been a lot higher. So I picked them as my number 5. Look into them. Their ticker is PEY on the TSX. I'm not sure what it is on the NASDAQ, but it's a Peyto Exploration. It may be on the NYSE. Look into them further. You're not my number 1 pick, but I just wanted to share some of the picks. If natural gas does go up a lot, this company will do very well as well, because you know, it's at low. See, it had around 2.11, and now it's going up to 2. It's at about 2.6 just recently. 2.574 it closed, and so natural gas tends to go up in the winter time when it gets colder. I've heard from numerous people that they're thinking that it's going to be a cold winter, so you can see it go up to 3.54 before 2020 potentially. I'd probably stay on the side around like 3 to 3.5, but if you buy it and you get like 25 to 50% gains on that, and then you sell. These are just investment ideas, right? I'm trying to grow my channel and be knowledgeable on commodities, have a bigger audience, just talk about some of the bigger players and less on smaller players. And The next companies I'm going to get into are more have a bigger monopoly in the natural gas and oil space. So Peyto's probably more of a acquisition target when the prices go up a lot, um, just because they don't have that much cash. And then my next pick is ticker ECA Encana, and they're on the NYSE and the TSX, and their revenues were $2 billion last quarter. I have calls for $7 strike, good till December, and they're around 50 to 50% natural gas to crude. So we look at the crude, $55. So say it goes up to 60, 65, 70. Now what happened just recently, Saudi Aramco is very big oil producer, and they're a private company. They're also owned 50% by Saudi Arabia. So when I look at that, I think that, you know, what happened to them is they had two drones that attacked their oil refinery. So that could place havoc on you know, their company, so they can't produce as much, and then oil prices will end up going up a lot higher. So that's my take on it. Yeah, that's where I think, and kinda see if natural gas goes up, and then crude goes up at the same time. Say it goes up to 65, 70. I could see, because it's been as high as about $14 in the last year in Canadian funds. So that's around $10 in US funds. So it's around 465 or somewhere around that range, 475 in US funds. So if oil goes up to like 65, 70, then I could see that Encana go up to closer to like $10 to $15 Canadian, and around 7 to like $11, $12 in US funds. So their market cap is 6.87 billion, and they have a goodwill of 2.6 billion. So goodwill is something that I've talked about a little bit, and it's not something that I'm fond about, but they are a big player, and you know, if prices go up in these commodities, I can see this stock going up a lot. It has a lot of volume when I check it on the TSX or the NASDAQ, so you know, a lot of people know this company. Their long-term debt is $7 billion, and they had net income last quarter of 336 million. So if that's on a basis of a year, then they get about like $1.4 billion in cash, so they can eliminate that debt. But if the price goes up, and say they're making $1 billion per quarter, then they could put about, you know, 600, 700 million dollars, million dollars every quarter, and then within like 3 years that would be completely paid off, and you know, they'd be making money every quarter, because you know, when the price of oil and natural gas goes up, this will do very well in the market. So another company that I'm gonna put on the list is Berkshire Hathaway owns 0.7% in their weightings, and yeah, it's not their biggest weighting. I guess they're not super bullish on the oil industry, which is a fair idea, right? They have a big ownership in companies such as Bank of America, BAC, you know, some other ones. Apple's about 5%, Coca-Cola, GM's a big one. I think it's like 10%. So those are more their bigger ones. They're also big with Sirius XM radio. But anyways, I'm going to talk about this one is Suncor, and I do own call options on the $40 strike in Canadian funds, and that's around $30 USD in US funds. So it's trading at about 40.38, so I am in the money. I paid about $1.15 back when it was about $37, because I thought that oil would go up. Now it kind of went down, but you know, I'm thinking in the near term it's going to go to about 65, 70. That's my predictions. I could be wrong. It could go back down to $50, and this would probably not do very well. But you know, they're a pretty safe play, a lot safer in my opinion than probably Encana, and a lot safer than Peyto. They have a $62.8 billion market cap, and their revs last quarter was $10 billion, and their net earnings was $2.7 billion, and their cash is $2 billion. So they have long-term debt of $12.9 billion. So if they start doing, say, like $5-10 billion a quarter in net earnings as say it goes up, they want to lower their price for every barrel that they're producing. And yeah, so they're also getting money from the government for some tax deferral thing. It was something similar to that they're getting money. So that's kind of going to help their business. But their cash is $2 billion. But yeah, the long-term debt, so say they do like $5 billion, $10 billion a quarter. If it goes to $75-80, then you know, they'd probably be making $10 billion in net income, so they could pay $7 billion per quarter, and then, you know, have that paid off in less than a year, and then really grow their cash position. So that's kind of that would really take them to a higher part. Their total assets are 93.6 billion, and yeah, so that's my opinion. Suncor, SU on the Canadian TSX, and SU in the, I believe it's the NYSE, but it could be wrong, and they could be on the NASDAQ. But yeah, I mean, if you just own that stock for a small position in your portfolio, say you have a dividend investment fund, say of like $50,000 or $100,000, and you know, you put like $5,000 or $10,000 into that fund, you on $5,000 you'd be taking about $200 that they would pay you every year in dividend yields, and then on $10,000 they would pay you $416. So that's a nice little feature of the Suncor, and it doesn't hurt that Warren B, he has a ownership of almost 1% in his holdings. So yeah, that's my opinion. Suncor, they're my number 3. They could have been lower, but I just decided to pick them as number 3 because they're not as big. They don't have as big of a monopoly. But I mean, I should probably put them as number 2 maybe, but I'm gonna pick them as number 3. And then the next one is Royal Dutch Shell, and their market cap is 227 billion, and their stock's going for $57, and their PE ratio is 11.46. So that's pretty good, and they did $388 billion in 2018. So they're number 5 in the most profitable companies in the world. So that's kind of why I picked them as number 2. And in number 1, I'm picking ExxonMobil. So I don't really have that much information on ExxonMobil, but I do know they're a big player. Let's look at their market cap. I can't look at the setter because they're not on the TSX. So they're going for $72. XOM on the NYSE, and they have 4.2 billion shares out, and their market cap is $307 billion, and their dividend is a dividend yield of 4.79. So it's a bigger dividend yield than Suncor, and their PE ratio is 17.3. So it's not as good as Royal Dutch Shell. I mean, I'd probably, maybe if I'm going to do the list over again, I'd probably pick, maybe I would switch number 3 for ExxonMobil, and then I'd put Suncor as number 2 and Royal Dutch Shell RDS as number 1. So I'm gonna change that, and I'll put number 5 Peyto, PEY, Encana number 4, number 3 ExxonMobil, number 2 Suncor, and in number 1 spot RDS, Royal Dutch Shell. And that's my opinion on the natural gas and oil stocks. So yeah, you know, I'm just looking at this. I'll look at the 6 month for natural gas. It's coming up, and with the easy money that's going to be coming up, and they're doing quantitative easing that hasn't been announced, but it's coming about. Gregor Mannarino, he talks about it, and yeah, they're buying up the debt. There's probably China that's selling a bit of their debt right now, so they have to buy it to stabilize the bond market, and then you know, just it'll make it easier for prices of these commodities to go up, gold, silver, as I talk in my channel, and you know, just seeing the same thing with crude oil. They want to pump it up above 60. They always want to have oil above 60. Now that oil, they're big. USA is big on refineries and producing oil and gas. So you know, that's a big part of their economy, and that's kind of how it when the oil market is up, it really helps the SPY go up. And yeah, that's just kind of my take on these 5 stocks that are in the energy sector in oil and natural gas. And you know, these are just kind of most of them, the Encana and Suncor and RDS and Exxon, they kind of have a monopoly on that whole industry. You know, there's other companies, there's BP as well, and I didn't choose them. I think I didn't pick them because they had a big oil spill before. And yeah, that's just my take on things. I hope you enjoyed this video and you learned about the energy sector from my point of view. And I talking about 5 different companies in the oil and gas and natural gas sector. And yeah, that's it for now. Keep compounding your info and listening to my lingo. Give me thumbs up if you found lots of value in this video. And until next time, peace. I am out.